Okay, great. Thank you for the question. I think we have started recovering, at least looking at some of the macroeconomic indicators that we've seen, starting with the real sector, for example. We've seen some stability, especially within the agriculture and services sector. I think where we have a concern is the manufacturing sector. If you look at the last 2 quarters, so the first half of the year, for example, you will see that agriculture recorded very positive growth rates.
Doc, if you may raise your voice a bit for me, I'm struggling to hear you.
Yeah, okay. So services also recorded very positive growth rates in the region of around 6%. But industry grew at a negative growth rate, so it contracted again, and largely because of manufacturing. I mean, so what we learn is that manufacturing is very vulnerable to macroeconomic instability. And of course, also we have issues to do with the oil sector, instability in the oil production sector. So yeah, there are signs, very positive signs towards recovery, which is a good thing. But we are not yet out of the woods. There's so much to be done, ensuring that we have fiscal consolidation, more especially when we go into an election year, because we know what elections can do to us when it comes to fiscal discipline. And so the key message then that we came up with is that government need to spend, but spend very prudently, very carefully, so that we don't add up to the already existing high debt stock, which has created a very huge problem for us, even in the area of expenditure efficiency. Now we're spending a lot of our revenues on debt servicing, all because over the years we've borrowed so much due to high budget deficit. We are not staying within our means, and if you are spending what doesn't belong to you, there is a cost to it, okay? And that cost you have to bear, nobody will do it for you. And we've seen the repercussions, especially what we saw in 2022, the instability that we saw. It was largely due to the fact that we were not within sustainable ratings in terms of our levels of debt, and there wasn't high potential for us to also raise revenues. And so we became very unattractive on the international capital market, which shows up in terms of the downgrading that you saw. And so you don't want that to repeat itself. So as much as you can, if we could increase revenues, that would be great. But that doesn't come too easy, at least from the experience that we've had. So then it means that the best way to approach it is to try and manage your expenditure in a more prudent way. So one, try and increase the efficiency of the expenditure to block leakages and inefficiencies to do with our public procurement processes. If you're able to do that, then that creates some fiscal space for you to do other things, investing in capital expenditure, infrastructure, social.